Welcome to TradeTheMBI.com. This is John. The support is for the 20th of June. I'm, of course, really under the weather. Had a bad fever for the last couple of days, but who knew? 85-degree temperatures here in Florence, and I'm wrapped up like it's, 12 degrees. But the market, on the other hand, has potential for a little bit of turnaround. I mean, extraordinarily weak from a MBI reading, but you still have magenta leading, and your rate of descent has faded after being way off. Minus, what was that green low right here on the DOC? We were minus 27. And then the red was at the minus 21, which we get a little bit of a bounce. It doesn't usually last, but I would still expect more attempts to push back towards the 38.50, which is that 23%, and see if they're able to sustain anything. I mean, there's just a lot of turmoil out there, and for good reason. There's a lot of things that just aren't getting any better, and in fact, the potential for them to get a lot worse is something we've been talking about for a long while. So none of that has changed, and the fact that some participants are finally coming to that reality is difficult. And what we really want to be paying attention to will be currencies. I mean, in this case, you've got the euro, we've got the yen, certainly the ruble, even though it's not really actively traded from a West standpoint, skyrocketing in value. And that just lets you know who the winners and losers in this setup are. And U.S., from its standpoint, faring fairly decent from a valuation standpoint. The difficulty gets into this commodity issue. You've got gold still kind of stuck because there's still this huge deflationary pressure that's building as prices reach ever and ever larger highs, makes it difficult to sustain economic growth. And as soon as that starts to tail off, you're going to start to see closures, discounts, those kinds of things. Will that be enough to overwhelm it? Unlikely, because the standard practice would be throw stimulus at it. So once you start stupid policies, they tend not to end because you never figured out that they were dumb in the first place. But that's an economics topic for another time. From an oil standpoint, we're off the peak here, but for how long? 108 is still crazy. Anything over 100 is just amplifying things. And again, like we talked about, the longer this goes, the worse it gets. I mean, what you haven't begun to see yet, and you may start, we're starting to see some reports of it, truckers stranded on the road, unable to get diesel. This is going to be the new reality of it. You're just not going to be able to get things. It's something I talked about last year, that would be an unusual occurrence, not since World War II for Americans, that you just may want something, may have the ability to buy the thing, but can't get it. And this is the supply disruptions. Treasuries obviously bounce up in there, reducing the yield just a little bit, but still well under that 120 range. And I wouldn't be surprised to see a break under 100, just a matter of time before it does that. There's no stopping it. The 3/4 point move isn't going to be significant enough to do much of anything, and they're going to have to keep going. And if they don't keep going, then you've got another problem because things are just going to continue to spiral out of control. And I think they're starting to get the picture on that as they look at the numbers. And as long as they play this Ukraine thing, it's just going to be a disaster. Bitcoin broke under 20 just briefly, and then it finally popped back up above, but that's precarious, no question about that. And again, this is something I talked about. Some of this asset deflation really has pulled away a lot of the speculative liquidity, and at least from a Fed standpoint, they see that as somewhat beneficial, but it's still wrapped in so many other, because what are you going to do about foreign reserves, which represents so much? And if we start seeing a liquidation of treasuries from China, Japan, and things like that, then you will have a flood back of dollars into the system. So that's just going to skyrocket the Fed balance sheet and deficit. So it's interesting. Very dynamic situation. You don't get this very often. And if you're into economics, it's a fun pursuit to look at because there's so many variables. ETH, again, trading beautiful. It shot back up much stronger. So much bigger support there after dipping below 1,000 as well. Actually, I think 1,051. So it's interesting to capture that, because there's a lot more uses from this, but what you're seeing is a lot of the alt variations of these setups not faring nearly as well as the main culprits. And we've been seeing a lot of this back and forth action here on the 50K. It's just getting to be a little bit mumbled from a 5K standpoint. We started off with a little bit of that peak and then sold off pretty much throughout, but every time we did that, being at the lows, like I say, you're going to have those rips up, and sure enough, pretty clean from that standpoint as far as their consistency when they start. Once we get that magenta over, and what I was working on before the fever got too bad was that transfer of these various indicators into just the single pay bar program, but also making those adjustments to have those color alterations when we have something strong like this, where blue is already over the gray, the magenta is already over orange, and you have accelerating DOCs. So those little effects. But here we are, post-market has been straight up and not on positive extremes. Those got filled earlier from the beginning of the day when maybe lows to the 3660 range. So a little bit of support here, about 37, but I think it becomes easy at that point. Certainly below 85, I think that the bias is going to end up being shorter, and above that, above the 3720 range is usually the upside of that. So if it's able to break past the 23 up into the 30-some range, then we could see a much more sustained run. As always, though, trade well. We'll talk again later. See you on the Skype chat.